Okay, how are you traders? Just let me know who's on and who can hear me, and we'll get the rant underway. G'day, Pete. Hope you're well. Is everyone finding it easy enough with the alerts coming through? I just send the link straight to YouTube on the alert. I know you can get it from the actual if you're online and you don't go straight from the push notification, then you can just get it from the actual alert within your login. If not, the push notification of instead of attaching the link for the alert, I attach the link straight to YouTube. Not sure if that's helping or if that's good, bad. Just watching the Hang Seng. So trades for today, which I stupid enough, I think I was telling you last time I don't want to trade before a stream, but I was short earlier on and I just was long. And I thought, oh, that's it, I'll close it. And I literally made 5 points and it's just popped to 100. So I got to learn to keep out of it. Awesome. Awesome. You can see it's just starting to ramp up now. I don't know if I can see that. So I was long just under this level here. Come off a key level, started to ramp up. That's the first decent sort of bounce it's had up. And generally, you get the sort of bounce, the next 5 minutes candles kind of inside. Generally, they would have, the weakness would have come in and sold it back down again. And just below that, but that's the anchor. Here was the anchor to the downtrend. And I sort of figured within that bar, if it just holds up and it pushes back up towards the end as the bar's closing, then I want to jump long when it just opened. It's off a 1 minute chart that went pop, staggered around here. I got to go because it was literally just, that was the 12.25 bar and I just bailed. Tad too early, but that's the way it goes. 887. It's up over 100 points and well, exit and entry, so it's a bit of a shame. Anyway, it's a profitable day. Made 30 or so down here at about, I think it was 2, maybe 5 to that. I can't quite remember. Figure it out later. So I meant to keep away from the markets. I really should lose my focus. But anyway, welcome to TradeSetup and the live stream for what are we in the 2nd of August. So a new month and a new rally, it seems like. So for anyone that's new, welcome. Just remember the general advice warning down the bottom. We don't give specific advice. I don't take into account anyone's perspective. This is only my own. What I think the market's going to happen. And that's pretty much it. So join us on Twitter. The top left-hand corner, you'll see the Twitter handle at trade_setup and follow us there. Facebook, pretty much the same stuff. So pick one or the other. I tend to be more active on Twitter if I'm going to be active on anything. And then the bottom right, subscribe to us at our YouTube channel at TradeSetup, capital AU, all one word. And then you'll get the heads up. And also, if you like what you hear at the end, just leave us a like. It'd be much, much appreciated. Help us grow this channel. Anyway, I'll get rid of that and we'll get into it if he wants to go. All right, so that's quite a strong. So markets this morning, it really did catch me off guard. I did not expect the ASX to be that strong. You've got, what are we now? The ASX 95. It's been up 110 at one stage. It has backed off slightly. That's the daily chart. I wouldn't have expected that today. I would have expected more some floundering, but I think at the moment we don't seem to be following. We seem to be leading. So we're positive today, and even the US sort of floundering around. Europe was down coming to the US session. So the US was sort of opened down, and then they floundered. They ended up negative, and we were down on Friday, and then so we were down prior to the US and European session, and we've turned around and we popped up quite strong, really strong today, which is potentially pointing to some strength in the US tonight, but we'll see how that goes. Amazon earnings come out, and that's kind of weighed on the action, but the US have got a really good habit for earnings of, smashing the estimates and then coming out on the same token, coming out and saying we don't expect that much later on. So next time around in the earnings, they can smash it because they beat their estimates before. It just seems like that's they'll talk themselves down, and so that the next time around they can smash estimates. It just seems that that's more often than not. There a lot of the stocks, pretty much 80% or so, beating estimates, earlier estimates, and then talking down future growth, which it could sort of knock things on the head. But I think at the moment, for me, the way I'm seeing the markets, it's around growth. We sort of all expect a bit of a sell-off. You can't keep chugging higher. The backstop at the moment, which has proved time and time again that it's going to work, is the Fed. They're not pulling. Their jobs growth in the US is not where they want it to be. Inflation. They had some numbers out on Friday night. The PCE index. Anyone that knows that is apparently the Fed's go-to inflationary index, inflationary data, and that was weaker than expected. So they're sort of anticipating better inflation. It's not there. So that goes hand in hand with what the Fed was saying about their inflation being transitory. So I think people sort of believe in that. So you believe so that the market was getting knocked around because of inflation being high, and now it's not. It's proving to potentially be transitory, like the Fed said, which means that they're not going to raise rates, which means all these different things, which means probably still a bullish market, but the markets are so extended, so overvalued that it's really hard to get onto, really kick on hard into new highs. So they're sort of chugging away new highs and getting sold back down again. Except for us, I mean, whether or not we carry on the next couple of days, I wouldn't expect so. I think it'll be a bit of a grind, probably down into the close on our market, and then maybe tomorrow we'll just back off a bit. Just as people rinse in and out of the market, people chase it high, get rinsed back out, chase it high, get rinsed back out. I think on the downside, it's actually capped or supported by obviously the Fed backstop, but on the upside, it's sort of capped. No one's get too bullish because things are extended. And when you're talking up down inflation, maybe now we're starting to view. I mean, the news will be putting it all over the news reports. Is headline is growth is slowing. If you're not going to sell off because of inflation, go and sell off because of growth. So they just want to see a beating either way. They want to see something they could talk about in the news, but that seems to be what's sort of flowing through at the moment. Is potentially the economic growth is slowing in the US. Maybe they've maxed out, corporates have maxed out, all that sort of stuff. It doesn't mean it's going to be a sell-off, but it kind of makes people tentative, new buyers tentative. And my theory is always is, the way I trade markets is, if it's not going to go up, is there enough juice in the upside that people start to get nervous and want to lock away some gains? And good, bad, or ugly, whether right or wrong, they start to lock away some gains. That puts other traders under pressure. Whether or not it should be 100 points higher is not the point. The point is, if no one's buying it and they're getting nervous, it could sell off that way. Whether or not it should be down, if the market does sell off and it should be down to those lower levels, is not the question. It's whether or not it will sell off. People are starting to get nervous, and I think there is definitely people around that have been long for a while. The longer you are into the market, with the more profit sitting on the table, the more nervous you're going to get. It keeps ticking high, and any sort of pullback is going to make you nervous. It doesn't matter whether your valuation should be higher, this, that, and the other. You're just going to naturally get nervous, unless you're just a raging bull. And if you're a raging bull, you still got to question it because it's up. The US has just ticked away nicely into new highs constantly. So they're the sort of two opposing things. Now, there's not. You read the news, a safe haven bid into US dollar. Yes, no. Bonds, yes, no, because gold's not playing out, and gold's generally a safe haven as well, and it's not. It's more looking towards inflation, talking up of inflation. Data come out on Friday at 10:30. 10:30, gold sold off. Simple as that. And that was when the US dollar sort of bounced slightly, and it wasn't a safe haven bid into the dollar because it is maybe. I think at longer term there might be a bid into the dollar, or more likely that shorts into the US dollar are closing. Not so much that people are buying it because they're fearful of a sell-off, they're more likely buying it because longer-term shorts are closing out. Okay, so the dollar did press down the last few sessions, I think Wednesday, Thursday or so, and then popped up on Friday off the lows. Whether that's just a squeeze on shorts, I don't think you can read too much into it. You go and look on Reuters. I read Reuters every morning. No, it's saying, yeah, it's the most long positions that are built up into the dollar since March. And I did put that out there, but you've got to think of it the other way. The more long positions built up, the less likely there's going to be more longs jumping in, and the more likely they're going to get squeezed out. So I wouldn't. The news like to talk it up. It gets fearful because as the long positions built up, it doesn't mean it's going up, and it has been going down the last few days. So they're building up on the downside. Who knows? But it could mean that just because there's a lot of longs built up, doesn't mean they got it right. Could mean that someone's going to come in and hammer them, and it goes back short again because you've still got, I guess, dollars to flow in from the US into the market, and sort of flood the US dollar a bit more. So for me, it's just chugging away each market and just seeing what it's telling me technically, because sometimes the macro view, it changes and you subtly changes and you don't know quite it. It's not your traditional buy gold as a hedge of inflation, because it's not working. It did work 2 days ago. It was looking great, and then bang, straight back down to 18.10 again, dropped $20 or so. So it's struggling to hold on to it. So there's no euphoria buying into it or people chasing their tail on the way up, because they chased it, it got extended a bit, they stopped chasing it, and everyone started to lock away some gains in gold. Oh, that Hang Seng's still going. So there you go. There's 150 points left on the table. Anyway, that happens. That happens. Not often. Well, it happens a lot more than I'd like to admit, but I hate it when you get on the right side of the action and then you don't make it pay. So where were we? So we're looking at just different key markets. The US dollar, what's happening in the US dollar? US dollar's sort of floundering at the moment. They had the big sell-off in the dollar because of massive amounts of stimulus from the government and people getting handed out checks. There's a lot of dollars flowing around. But then it got supported by the Fed buying up bonds. So bond yields are holding right down. So bond yields actually popped up on Friday night. Potentially, you could say that's a safe haven into the bonds, but I don't think so. I think it's more just they're playing. Everyone's sort of, it's a bit rangy. Not so much the equity market, but the bond market's a bit rangy. The dollar's a bit rangy. Your currency is sort of flipping around on a sort of wider range. The Aussie dollar was heading high and it got smacked back down again. I don't know where it is at the moment, but sort of more range bound at the moment until something works itself out. Everyone knows we're not too high. We could always go higher, but there's always that talk where the market's going so strong. It's such a bullish market. How much more can it go? We just having earnings in the US, in our country too, and in Australia. Some stocks, are quite a few stocks getting knocked out on the earnings as well. So it's kind of like, where are you going to get the future growth from? And that's what everyone's it's on the cards. But then again, there was no Fed support. There's a good chance that rates would be a lot higher, or they would be a lot higher. Probably forced in a corner if they weren't supporting the buying bonds. Rates should be higher, and you probably find that stocks wouldn't be where they are. But the problem is they are, and the Fed is manipulating that market to keep it. So anyone that's willing, if you're thinking about selling a major chunk of your portfolio, you've got to think twice, because they could turn around, go down, straight back up again. So you really just have to wait and see what happens. I think when the market turns, you probably get caught pretty quick, I would expect, but you don't know where you're going to get caught from current levels or 200 points higher. So that's my view. We'll get rid of this. We'll get onto key markets, and then I'll look at some stocks that we've got. Is that what I want to look at? Daily. There's my little note to myself. Trade what you see, not what you think. I'm going to look at, so the SPX. This is on a daily chart. This is kind of it's getting capped. It's a longer term uptrend, but it's kind of running into a bit of resistance. Now, if it breaks up there, it's probably heading to the top end of that channel. But at the moment, it's kind of, you can see this resistance zone coming through, that rising resistance line, whatever you want to say. It's getting capped there, which doesn't mean it could come off tonight because it's up towards that top end, or it's up towards that resistance. It may just mean that it could chop around here and grind its way back up. Like this kind of action, a few days, just bang, 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 and then a sell-off, a flush lower. And then definitely flushes lower, maybe getting a bit deeper than they were. This is a bit of a deeper reaction lower than this previous reaction and this previous reaction. maybe it's going to keep flushing down until it gets to the bottom end of the channel and start working its way back up again. So longer term, we're going up, but just that chop, that rinse and repeat, throwing people out of the market, they get nervous. You call it the weak hands, and then you go straight back up again. But either way, longer term, the market, the big S&P is still heading higher. Got the Dow. The Dow's just hovering around all-time highs. It's quite clear that push into the highs previously just in here. I think it failed. It didn't close into new highs. I'm not sure if it got there. But anyway, it was up at highs and then failed off it, flushed lower, come straight back up. This candle here, this day on the 26th, did get into new highs, close there, straight back down again. So you can see that we're popping to new all-time highs. That should be a bit more euphoric than it is, and people chasing into clear skies, but it's not. It got up there. Next day, it was lower, even though it was up all session. It was rallying all session, but it just opened lower and sort of grind its way back up. The next day was down. You can see this red candle here was down, and we're sort of just hovering around those levels. So why doesn't want to get up there? Because it is. I still feel that growth-wise and where we're going to go to, it's still up in the air. But you're not going to sell the portfolio because the Fed just pull out all stops to keep it back up again. That's Nasdaq. Same sort of thing. It's still kicking on higher. Not much to see there. We've got the same sort of thing as the S&P, that resistance coming through. Whether or not that's confirmed just yet, we probably would want us, because you could have gone, say you've gone there, just adjust that. Well, it's near here nor there. It's still heading higher. It could be just bumping its head up, taking out the highs, backing off, taking out the highs, backing off. Now that, to me, I always feel that when you've got price action that's like, it's up, and then when you start getting this kind of action, it doesn't get through the highs very much, but the pullback's a bit deeper. I tend to feel we're going to go bang at some stage. So I'm always on the defensive, but you don't know this kind of action, and it drags people. People buy the breakout. They can get squeezed out. Not everyone gets squeezed out, but they can get squeezed out because you've got, I always talk about the 1/3 to 2/3 pullback. It's kind of the 2/3 of a pullback. You just break through the highs and you get 2/3 of a pullback of this leg up, and just to flush enough weak hands out, and it grinds back up again, gets through the highs by a few percent, and then bang, drops, say 15%. But it's a 2/3 pullback. It's a deeper correction of these minor legs up. They're deeper corrections. So you don't know how long this kind of action can go, but it keeps dragging people in. They get sold into. It drags them in, sold into. People who constantly want more confirmation. You're not buying in the unknown, they're buying in the known. They're buying here when it's a clear uptrend, but it's not that clear because it's kind of, I think, potentially prepping for a bit of a sell-off or a deeper correction. Then they all chase their way back down as they're closing out. Then it potentially does this kind of thing, flushes out and it starts to grind all the way back up again. So at the moment, that said, it is chugging higher, and it's still going to new highs. It's still a well-established uptrend. The channel, not much has changed just yet. We would have thought maybe earnings, people buy the rumor, sell the facts, sell into earnings. It's not really happening, because they're outperforming. So we'll just have to see. You can't do much about it. The DAX this is all-time highs on the DAX. Don't get rid of that. I was a bit more bearish on the DAX recently, but it sort of popped up. Let's just clear all that. It's there. You can see it's not that kind of nice strong leg up, good pullback, goes into highs, a decent enough pullback, retests the highs, back down again. To me, that this is where I would think we're heading if that's the case, but it doesn't mean we could consolidate here and plow through into new all-time highs. Just because we've got this leg down that flushed this low, it's kind of like this is the anchor to the uptrend, right? So you've got to be wary of your anchors. That's the anchor. We're chopping around here. You can't get up through the highs at this little run up, so you've got to flush out. Some more people flushes them out straight back up. So we could just as easily chop around here and then bang into new highs, as we could just roll over from there. So and that's purely because we haven't broken the anchor to the uptrend. All right, so we'll have to wait and see on the DAX, the FTSE. I don't think that's all new all-time highs. No, they're still away off all-time highs. So we're just sort of concerned about these highs here. Again, like the DAX, it's not at all-time highs like the DAX is, struggling at all-time highs. It's struggling lower. Let's just look at a weekly on that. It's kind of interesting. Yeah, it's not a pretty picture. on the old footsie there. If you say that's the anchor to the uptrend, you can see it's not just because we flushed there. We had a big push back down again, but that's probably artificial rally on the back of stimulus. They're just throwing money at the market to buoy it. Yes, your weekly. Let's go back to the daily. But again, it's still, we're struggling up at these highs. It's kind of pressed up, took out this high, floundered around, took out the high, went extended a bit, pulled back, extended it a little bit, struggled at a lower level, flushed down, bounced back up. So it's to me, it's very choppy. It's not a massive. Well, look, the market's going up, but it's in quite a wide range where you get these false breakouts, and then there's these lower highs come in, lower highs flush people out, then it turns around and straight back up again. So it's not only flushing out longs, it's flushing out shorts. People get short, get set, bang, it flushes them back out with a bounce. So you've got to be nimble especially if you're trading indices for sure. Be nimble. You don't put on a massive position trying to buy the low when you think, oh, we'll just buy that that support, and then it bounces up, and you're going for broke for a couple hundred points. It turns around and comes straight back down again. I think you've got to be nimble if you're long and you see weakness, depending on what charts and what levels you're looking at. I wouldn't be mucking around. You can always get back in if it does keep going, if it reestablishes and starts to go again. Other markets that I'm looking at, I'm keeping my eye on, obviously, the dollar. US dollar is a big one. Now, this dollar, they're saying that people could be loaded. They're saying the amount of longs, I was just saying before, has increased a lot. It's probably the most longs into the dollar index, and that's where they look at the Aussie dollar, the euro, the Swissy, the US yen. They weight them all up to say, basically, the dollar longs are quite high. I think it's the highest it's been since March 2020, not this year, but last year. So that's talking up, oh, we've got strength coming into the dollar. We've got strength coming into the dollar. It doesn't mean we have. If you look at this, on a bigger perspective, you've got the market pressed up here. This was, this is when the market, it's already, the US dollar's already coming down, and it got this bit, it comes straight back up and failed again. Sorry, this was the pandemic, wasn't it? Forget what I said. That was last year. It was a pandemic. And then bang, straight back up into these highs, and then failed again. And we've come all the way back down. So very minimum, we could be ranging, but to me, that's not confirmed until we break back up through 93.45, say. Okay, we could be ranging, we could be finding a bid there, and we go, you'd want to see it rally from here. And then, if you're long, you'd be feeling comfortable. You see this kind of thing potentially back up over the longer term and then back down again, you get your lower high, and you're range trading it. If it doesn't break, there's a chance we just come screaming back down, okay, and come straight back down through this 89.40 zone. And then all those longs that have built up, like we said, they're building up off this support, expecting it to push up, turn around their fodder for the market to go down, for this US dollar to really sell off. Because longer term, it could easily sell back down through this level and go to lower levels. We could be looking back down to this zone in here, which is around 78. And the US dollar really take a beat. And it could take, let me just go back to here. I just saw that level there. Let me just go to a weekly. Yeah, so you can sort of, you can sort of see why it's bouncing off here, why people are getting long, but you've got a massive double top up there, essentially. So a double top, if you pressed up here, you've had a good pullback, you've taken out the anchor to this leg up here, you've taken it out with this move down, then you've rallied back up. The second time you fail after taking out the anchor, to me, it's a change of direction from up to down. And it's a long-term change, potentially. Doesn't mean we can't grind up and build this kind of thing. We get up through that level, go up, and then start to fail here, and get a key lower high where we just go plowing straight back down again. There's still a lot to look at, but I thought it was interesting to see when they're talking about the US dollar, lots of US dollar longs built up, which means, it's going up. Doesn't necessarily mean that it could come screaming back down. And at the moment, on the daily trend, let's get rid of that. We've got this uptrend, powered up, grind into resistance, and then that's failed. So then now, if that's failed, potentially that lower high is taking a step back down to that level, which plays into the fact that that zone up here at 93.25 is going to hold, and we're going to squeeze out some longs. Okay, we'll just have to wait and see. We still got this. It's kind of this. It's not the anchor to the uptrend, but I've just got it in there as a key level. Okay, so we have to wait and see. Yeah, Gino, we'll have to wait and see whether we do fail off and we come back down to support, or we start to chop around here, hold a high low, and we want to go high. If that's the case, then you're sort of looking at this leg up, find support, consolidate, looking for the sector. So just measure from that leg to that leg, low to high, measure it out from where a clear support zone. It could be that could take us up to. Look, actually, just do that. This is what I'm talking about. If that's your level, clone, yeah, it could take us up through that 94, 50, 95 area. If that's the case, if this is going to be support, but you need to see it confirmed, not just turn in there, bounce. You want to see it, tap it a few times, flush it, rebound, until the sellers give up and then buyers start lifting it. All right, that's the dollar. Let's look at a couple more things. Oil. Now, oil, that's the daily trend. And it has broken out. If you look at this 30-minute, this is what I'm watching. Oh, I've been knocked about a bit today. I can't remember what I said. Hopefully I did say it was going to get potentially knocked about, but so if you're looking on a really short-term chart, you could be forgiven to believe it's going back up if you didn't realize that the bigger dynamics in place, so the daily and everything. So if that's the case, you might have been seeing this, and I was looking at that. The way it was spiking down and getting bought up, I thought, okay, we're probably going to get through this level at 72 bucks a barrel. Next target up is around the 73, 73.50 area, which it just sort of chopped up through there. Okay, then you go, once it got through there, you're probably looking up to these major highs at 75. But you've got to realize that those major highs at 75 is major daily resistance. Okay, and we go back to that daily chart. So that to me, if you're just looking at this chart here, this most recent price action, yeah, that could be bullish. It could be banging down here, holds at 72.60 thereabouts, and heads straight back up, goes to 75. We don't know. But just because if that holds, it doesn't mean to get loaded up long, because on a daily perspective, the market it has had a good run up. We've had a good leg up here off the negative. No, it's actually 30 after that big flush there, that stupid flush below down at negative 40 a barrel. God. Big run up here, consolidated, held a higher low, expanded on that rally, expanded up to previous daily highs from 2018. Yeah, 2018, mid to late 2018. Okay. We pressed up through those highs and then we failed since. So we know that there's a big sell zone up there. Okay, so you just can be wary that if you want to get loaded long on oil or oil stocks, that this here could just be that little pop up through that 30-minute chart to drag in some 30-minute bulls or some shorter term bulls and turn around and just get absolutely sold off hard. I mean, this looks prepped to me on a daily chart where we could roll over from here. Okay, so we could have a bit of a spike, it'd start doing this, and then boom, just depending on what the overall market's doing. All right, so we'll have to keep an eye on crude. So I would think when crude was grinding higher, wouldn't mind seeing it up at 75, but I'm not too interested in oil stocks because it is up at a daily level. I want to see a good flush, a good daily flush, and then start to build, because then you've got a lot of emphasis back on the upside. Let's go look at copper. Copper's reacting. Let's clear this up. So I was saying that breakout there was going to lead to a spike high. I think it happened pretty much that day. It spiked up. But again, we've got into weekly resistance. I want to clean this up a bit. Into some serious resistance up here. That's a daily chart. I don't know if you can see it. Yeah, so you can see this zone. This is from back 2011. So the market has had a good run up from, say, that 2 to 450 or thereabouts. That good leg up on a daily chart. Really good, powerful leg up. Spiked through, flushed down, held an inside level. So we're still really holding that daily trend up. But if this becomes a lower high, that would mean that we're going to go, as a broad measure of where we're going to, climb that. Well, that's not what I want to do. This is what I want. Come on, there we go. If that's the case, we're back down, potentially breaking down to below 4. Okay, so copper is moving around with the US dollar, obviously. US dollar got a bit of strength, copper sold off. So I'm not saying that that's the case, that's going to hold, but there is concern that if you're raving bull on copper, just be wary that we're up near daily highs and the market may want to flush some more buyers out before it starts to reset and go again. But looking at that, if the way we spiked up, so dropping down to a lower time frame, just go back to the 30-minute. this sort of grind here, I don't think bulls are going to want to see the market sort of back through that level, okay, which is for, say, 45. Makes sense. So if this can hold, and we could chop around here and bounce back, just the way we broke up through out of that, that's contraction lower. We broke up and through. Okay, we've come screaming back down. That's probably just to flush out some bulls here. If we start to hold in here and start to lift again, look for your high lows to press back up and maybe test up to 462, maybe higher. I don't know. But you're going to have daily resistance. It's going to be a bit of a headwind for higher prices. All right, so we've looked at crude. You know, currencies are probably look at the yen just for a bit of an idea of what market was heading down, US dollar. So if the US dollar is heading down, we probably wouldn't expect, say, 109.80 to hold. You know, we would expect 109.80 to hold today, or at least sort of up at that 110 area, potentially to hold. We might get a bit of a pop up and then some failure off at this level, but the trend is still intact on the downside. Okay, on the US yen, which means potentially some US dollar weakness or some serious yen strength and US dollar moves nowhere. But I don't think generally the yen's playing around, moving around because of a safe haven bid, or no safe haven and a safe. What's the opposite of safe haven bid? Some euphoric selling because everyone's happy in the indexes. Okay, that's brilliant. Let's look at the Aussie. I just want to see where that is. So this is kind of the. I'll go on the daily chart before I get onto that. You can see the daily. We've got resistance up here. Touched it a couple of times. Big sell-off. We got smashed last year. Was it last year? Yep, last year. Big bounce back. We pressured back up into this zone. It's 80, so 80 even. All right, we pressed back up there and we failed. And remembering on the daily chart, we've got this inside level. The market's sort of chopping around. We flushed that level and then we selling off again. So whether or not this is enough, that kind of leg down there, takes us basically to where we are, and we're going to start to rally up from here, or whether this is just, forget about this move down. I use these, anyone doesn't know, is your volatility. So that's your volatility on the way down, hold an inside level, and you're generally looking for that secondary leg down. So if you're anywhere in here and you're looking at the daily chart, to me, that daily chart, that move down once it gets underway is going to continue until it gets to sort of this bottom end, which is back into that 75, so what, 73, 74 area. And it's extended that. But if you're short from up here, that's kind of where, as a rough target, where the market could be going to. If it falls short, it's showing a lot more strength than you expected, and you probably get out. Okay, but you can see on the daily, it really didn't change. Nothing really changed. You got lower high pressure in here. It started to sell off. If you got short through there, you got lower high bounce. It took out the lows, straight back towards the highs. But if you're trading it just from the daily, it didn't break trend all the way down. It still really hasn't broken trend. Okay, so it's still in a downtrend. So that being said, it's kind of a clear level just in here. We'll get there into a 30-minute chart. This is why I'm looking at these two sort of levels here, 73.35 and sort of up towards 74. All right, so if bulls are going to start to take control, you can see these flushes are getting bought up. They get bought up here, bought up here. Are we going to get bought up again, or are we going to sell off and break down these lows? So there's enough juice that people probably bought it on the longer term time frame. They bought it off these 30-minute lows. They were sweeping them up. They're building a long position, and we turn around and squeeze them out, and the market heads south. They all have to chase the tail, sell back into the market, and the market presses down, and we continue that trend down. If it's going to hold, you're going to want to see some higher lows, pop back up, and you're going to want to see a spike up, and then maybe something down, and then something like that. That's what I ideally want to see, and you want to see what happens back at 74. Okay, so if it extends from here straight into 74, it doesn't necessarily mean that the trend down's over. It could do the same thing here, chop around and bang, back down. But at the moment, it's kind of rangy to me, okay, on the Aussie. But we have extended a good leg down on the daily chart. We're finding a bit of a base in here at, say, was it 73.40, 73.30? Bit of a base in here, and that's an inside high low. But if you're trading long, you are against a predominant downtrend. Okay, longer term downtrend. So you're just going to be wary of that. And when the downtrend kicks in again, it could come screaming down pretty quickly. All right, but if you're going short, there is the opportunity on the flip side that there's going to be a big squeeze up. So as long as you know that what your bigger pictures are saying and where you're going to be proven right or wrong, then you're fine. That's you just manage your risk as you go. All right, shares. So start putting some shares in when I look at. I've got a couple that I'll just go over, and we had someone whacking AR9. We'll start with that one. Actually, I'll start with ADAD since it's up here. 88 Energy Limited. Oh, no, I'll take that back. I didn't want to just do that, exactly that. This one to me looks pretty good. And anyone that knows me would probably be quite proud that I read a bit of fundamentals. It wasn't just your straight technicals this time. So you've got, obviously, I mean, this is a powerful move up, just obviously in the back of news, just bang, straight up. So God forbid you bought it up here at 9 cents. And then actually the very next day it was right back down at 3. So there's going to be a few, I'm assuming on that day, a few buyers that are holding it, hoping for the best. But they've just, I think they're having a cap raise or something at around, I think it's slightly lower than where we are. We're at 3.94. It's probably around 3.5, 3.4 cents, which is not such a great thing. You're doing a bit of a capital raising or some oppies getting converted or something's happening where more stock coming online at a lower price. It's probably going to cap any sort of bullish momentum up. So I did read that, and to me that price action is looking really good. But is it? What am I doing here? 11 million at 3.9. So someone's smacked in. I think that's someone hitting the bid. That $500,000 is basically off the bid. Because you can see it was trading 3.94, 3.94, 3.9 was the last big offer. So there is some selling coming in. So if you're looking at that, I would just be wary of what's going on. So I was going to alert it, and I'm looking at it thinking, look, enough volume, 2.7 done. Only a small market cap, but some good volume. But you're probably going to run into some massive sells that you could. I don't know if anyone knows what an iceberg order is. It's like an iceberg order. There could be, you're looking at it going 30 million on the offer. Okay, fair enough, but there could be a lot behind that. If it starts to go, they're going to start smashing into it because they want to get out of some long positions. So just be wary. But yeah, each way, I mean, that was a good looking. I think it was quite a good looking little stock there off that 3 zone. If you're going to buy it here, you sort of got the 3 as your risk if it goes back down, and that means that I think the corporate action or capital raise is above that. But I still would let it. I would let anyone that wants to take that and then sell and book a small gain. I'd let them get out, just squeeze out some stock first and start to reset after it all comes online. That's that one. PRU is another one we got. That's to me looking good. We just got through this high, which is quite important. The high at 166. We pressed through that. We're holding above it for now, which means this weekly chart, it could just keep grinding high. It is extended, so that's got me a bit concerned. The momentum up is not out of control, so we might just have to be patient with this one to see higher prices. That monthly, I mean, look at the monthly. That monthly's the momentum's starting to swing back up, which is a good sign, and it's coming off this key higher low. So even though it's a bit extended, I mean, you can get extended and keep going up. You can consolidate sideways and go up again, and really start to get a head of steam on the upside as people are waiting for the pullback, and it's just not happening. So that's, to me, is pretty good. There's spent quite a few weeks around that 110 mark, holding above 110. So if you're going to get long off that higher low, you've had enough opportunities. You've got a higher low on the weekly here and another higher low, and it's starting to go now. So if this thing just keeps going, it'd probably be a case of the MAs catching up to price rather than the price coming back to the MAs. All right, so that looks good to me. That keeps going. We've got, was it NVX, which has kicked off today. So we're long that one. I can remember what from 240. I'll have to find out. I know someone else will probably be quicker at it. NVX 246. In at 246. It's getting a bit frustrating. We had a profit target, a partial exit at 3, fell a few cents short. What did it get to? 290, 295. So it's just at a whole number. I thought it would just go through it, to be honest. I thought it would power through there a bit higher than that. But it didn't. It backed off, bang, straight down, and then we've been holding it, and now it's starting to look good again. So if this off the MAs, which is really nice, it's starting to hold, sort of around that, was it 250 area? and it's starting to lift again, to me, that's going to go through 3. So more than likely, I would expect we're going to get that partial tagged. The MACD is looking good, which means momentum starting to lift, some good volume today compared to the previous days. Everything's looking quite positive. So I think if you're looking at the bigger picture on the weekly, leg up, good leg up here, pull back, consolidate, leg up, pull back, we've consolidated, we're starting to rise again. We're starting to rise on the daily. And on the weekly, we're on the rise too. So that to me looks like we could get up to 354 potentially. So since we got in at 246, all I'm really looking at, I want to take some off the table and see if I can ride it. And if it can't get back up through 3 this time, then I might have to close it because it should. In my opinion, it should with this price action. Now, if it can't, there's a good chance that we got up there once, we come back, we've retested, we're failing again, we're going to go to a deeper pullback. All right, and I'd rather be out reassessing than staying in, hoping for the best. All right, so that, if it does, which I do expect to get 3, I would expect the next level is going to be at 350, where we might find a bit of pressure up there. BVS. So this is only a few that I've just got on the radar. I think it's all about the weekly. I'm sort of looking at the weekly. I mean, yeah, the daily, you've got a couple of good green candles, a red candle, green candle just here. I wanted to see a bit more work. I want to sort of see consolidate a bit sideways. So if you can consolidate sideways, what it might do is start to flush out some of these buys that go, oh, look, and everyone's going to get nervous. You get nervous at different times. If you loaded a boat into this stock, or you might get nervous and you might get squeezed out of some. If it can go sideways, consolidate, because the weekly is kind of the powered up. That's a deep correction. In 1 week we got up, and in 1, 2, 3, 4, 5, 6 weeks we're back down. So it took 6 weeks to grind its way back down, but it's pretty much gone back down to that start, into that 325 area, like you can see previously into here. Okay, so now we're on the rise again, which is good. On the rise on the weekly, I would expect it's going to continue up, and it's really just about what happens in that daily. I wouldn't mind it going sideways a bit, and then we can get an entry on a breakthrough 350 with kind of minor risk. But that's probably only because this is quite a decent pullback. After that kind of move up, a few green candles, bang, we flushed out quite a lot of traders. Now, if that was a very strong market, whoever bought it through here wouldn't get out, and there wouldn't be sellers wanting to get out. It should be holding off this MAs here and go again and go again. If it was really strong, if it should be a lot higher, the fact that it's come down all the way back down to 320 is a bit concerning. So even though the weekly's up, it's looking great on the weekly, it's holding on the MAs in the weekly, I want it to prove itself a little bit more before I'm willing to jump in, go long. Okay. What's the other one? 88E we've done. AR9. Whoops. That's the one I was going to do originally, wasn't it? Now, this is a weekly chart. Looking good, but it's kind of, if you're looking at it at this week from the 28th of June, let's just draw that up. So they've done 40. So that's a small stock. So you're going to be careful. These things, they don't tend to trade as, if it's going to go, it's going because people know about a story or are following the story, and they just dive in. They're not too worried about the technicals of it. So it's kind of harder to trade weight for these these little pullbacks. Like that's a good one. What am I on? On the weekly. Okay, but that's a good little pullback, and it's powered on from there. So ideally, I wouldn't mind seeing a spike like that, a flush, and holding a higher level, and I wouldn't mind it coming back down and sort of retest that 30 mark on the weekly chart. Doesn't mean it's going to, and that's the hard thing. If it just keeps going without me, I'm turning to the next stock. I don't really care. But what I'd like to see is that I'd like to see it sort of hold below these highs. So this high, I've just picked that out there. You've got this level through here as well. It's kind of broken through. If we can look just from here, if we can sort of back off and then consolidate, something at a slightly higher level through 32 or 30, even retesting a 30, then I think the next leg it's going to take us up and through this zone up here and may power on. If we can get something like that, you'll know pretty quickly because it'll just go bang. Up we go. So the weekly to me is kind of extended away from the MAs. I mean, if it goes sideways from here and the MAs catch up, then you've got to look for a long. But if it just keeps going from here, I think it's too extended to trade, to go long. And that's just the way I trade. Okay. And that, you look at the daily, look a good little even that, there's a couple of days. I don't think it spent too much time pulling back, even on the daily chart, and then went pop. So if you bought that breakout there at 30, 35, you stopped sort of at 30 cents. You're okay at the moment, but you haven't got a chance to. I mean, this thing could easily roll over. You haven't quite got a chance to raise your risk level on the daily chart. So I'd ideally like to see something like this, a bit of consolidate, go to the MAs sideways, MAs catch up, and then it starts to expand again. So I wouldn't mind this sort of pulling back, going sideways for a few days, a week or so, and then see what can happen from there. But I don't mind it. I mean, it's definitely going in the right direction. On the weekly, it's bounced, hasn't had its first pullback on the weekly, but we have pulled back on the daily, bouncing off the MAs in the daily. So yeah, lots to like about it. Just be careful that, oh, there you go, they're loading at 39. They might want to protect it at 39 cents, 40 cents below that 40 cent zone. Okay, so just be wary. All right. Is that all I want? Oh, SWM is probably the last one. We're long from 47.5. Is that right? 47.5 on this one. That's at 49 now. I can't remember. We got long on this day. We got long and then bang, straight back down again. So for a while there, I was a bit concerned that we're gonna roll. But yeah, it's that action looks great. I mean, on the daily chart, you're gonna have to probably sit through a bit of chop. If you look at the weekly, look at that weekly there. You know, that's an absolute cracker on the weekly. So we've pressed higher, we've come back, we're sitting on the MAs. The MAs you can see, only slightly see, are starting to roll back up again. So when they're rolling back up again, that means that there's some strength in that weekly to the upside. All right, so just that's why I like that weekly, and it's just a matter of trying to get in at the right time on your daily. I mean, like I said, we got in here on that day, 26, and it did end up back below where we got in. Pretty much we got the high, was it? Just at the high, half a cent below the high. Got long, finished back below our entry. You sit there going, maybe it's still got some work to do. We might get it flushed out. I can't remember where the stop is. But anyway, might get flushed out in a bit of a pullback before it has to reset. It might still need some time, but after the last couple of days, it's been quite good and it started to tick on higher. So I would expect we're going to start seeing a move up through this high at 51, and then we're going to start to make the move on that 60 cent level and grind our way up. So I think it's quite good. That's is it 7 West Media? It looks good to me. Good volume. I think they were trying to cap it. Well, it looks like it was trying to get capped, and they've moved it back to 60. So potentially building a longer term position up and just not letting it get out of hand too much. So we're just having some cold coffee there. All right. That's what I wanted to go through. So we've got, I'll show you one more, and this is one I'm going to kick myself about. This was a cracker, and I did sit there with the alert sort of ready, thinking I wanted to see a bit more action on the downside and see a bit more consolidation, and then we go. But I mean, in hindsight, trading in hindsight is so easy. It's just taken off. So it should have been a buy through 120 with your stop just below 105 or thereabouts and the risk on. So now we're sort of sitting here waiting. This is Sarah Resources, waiting to see if it can pull back. So I think longer term too, it's not, that's a good little chart. So that's a lot like we're just looking at SWM, bouncing off the weekly. And that's sometimes the problem when you don't really get much of a pullback if it's a weekly move because it's just strong. People had a lot of time to build up a position and you either do or you don't, and it just goes sometimes without, and you just sort of get left on the sidelines, aka us. All right, so that's the weekly looks good. The MACD, great. It's had a bit of a push higher, momentum's up, come back to the zero line, and momentum's swinging back up. You've got some volume supporting it. Some good little volume on this sort of push up. I wouldn't mind seeing what happens if we get a bit of a flush layout down, sort of a decent, at least a pullback of some sort to maybe 130 on S1. It starts to hold, we might be forced into getting long because that weekly is looking good. Okay. Yes, that's me done. We'll get on to Pete's put in one. If anyone else wants one, something to look at, just whack it in the chat and we'll go from there. It doesn't have to be a stock, it can be anything. I'm sure I can get an opinion. Sorry, and before I forget, if anyone's heard of the bull.com.au, I'm probably going to be on there in a couple of weeks. So we'll see how we go. So if you've got some good recommendations you think could be good, worth talking about, I'll take a look at them. So you got to apparently got to do two buys, two holds, and two sells. So I'll get up 6 stocks, give them a reasoning behind it in a few words, and then that gets published on their website. So I've got to do, I've got a few on the list. We'll just see how they go. Probably the ones I'm talking about today, except for SYR because it's already gone. All right, CTD. So that daily to me, it was consolidating sideways here. All right, and if you're looking at there, and we've touched up through that level prior and before that, it's kind of, and you look at before the sell-off, it's the same level around 22. You've got to look at it thinking from a daily perspective, or do I want to go and buy? Because what you're getting is, a big sell-off from here. You've got to move up. Don't worry so much about these moves. This move up here, they're sort of all one leg to me. The pullback's a deep pullback. A move up to the legs. The pullbacks are shallow. Oh, this is a deeper pullback. Potentially, this is a, we'll go back up into the zone again here and here. And it's a shallow pullback back to 20 before we go, we push back up to 22. But we're getting selling again today and yesterday. Sorry, yesterday was Sunday. Friday. There, got it. So we're still getting selling at the same zone into those highs. So what that means to me is potentially we're going to run out of buying because we're sort of consolidating sideways through here. We're sort of, to me, we could run out of buying. We're not saying we will, but I don't want to buy it there after this good run up over the longer term into those highs. I would rather see a good flush down and try to buy on a pullback like that. We get a big pullback, we start to hold. If you can get a higher low, even though it's below the MAs, this looks like, say this position here. I'll draw that up. I'd rather trade it that way, right? Off something like that, or in here, off the MAs below this zone up here. That was hard to trade. Potentially there's not really much in here either, but you can see a little double bottom. We break that. You could ideally have buy on the break there with your risk below. If you're wrong, you're wrong. But after a pullback that we've seen like this, we've got maybe a higher low in here, flushed down and finished on its highs. That could have been a nice little entry, after the break. If you can see the break here, it seems to be that it trades that way, through here. You can see that we're in the right zone. It's a different kind of a setup, different entry, but we're coming after a good pullback. Whereas here, we haven't had a good pullback. You've had these little minor moves down. Yeah, it's getting met with buys, but it's still into a big resistance zone. Right, so I would rather see that flushed, a deeper pullback, and it might be the case that that's going to be, if you just take it there, we might come back down to 19, 18, and then we get a go. Because if we're right, and it starts to pop up, then you've at least got some buffer. If the market again fails off 22, it fails off a lower high. But up here, if you're buying it up here, and it does roll over again, you don't really have any buffer, and you're really going to be concerned about the stock. Break of 22, yeah. Now looking at the weekly, yes, I'll probably stick by that. I wouldn't mind seeing a bit of a pullback and then see if we can get on that. It is sitting on the MAs here, but it's pushed below the MAs the last 1, 2, 3 times. MAs are up on the weekly, but it is struggling through that 22 level. I mean, it could easily get through 22, flush it, and straight back down again. That's the biggest problem. So if you're going to trade a break of 22, you're going to have your stop kind of off the weekly chart below, say 19, which is this low here. Okay, so if you're trading it that way, it's just drill on that. But purely off the weekly chart, because I wouldn't be trading off the daily. Let's get rid of that. Wrong one. You can see even that's gone sideways, which is the MACD. Volume's kind of coming down. You don't really want to see the volume down into a resistance zone. You want to sort of see, and if it breaks through, it has to be supported with volume. And if it breaks up and through 22, you want it to finish above 22. You don't want to see it break up and through. Everyone gets long, turns around and comes back down again because it's just a bit of a flush, which it's done before. Did it here, bit of a flush here. Does it a bit. Okay, so just be wary of that. What was I saying just here? I can't remember now. Oh yeah, no, sorry. So if you're going to buy the break of 22, you probably want to wait till it breaks that high, and your risk is going to have to be below, roughly there. Because if it goes up through and it comes back down, it's probably going to get through that 2019 mark, and then you're going to get stopped out. As simple as that. And you'd rather, if that's the case, you're going to get stopped out there. It's probably going to have a deeper correction, and you have to reset. All right. Too big a risk for me on that. I would be trading it off the daily if I could. I would try to get a pullback and a runner on that break of 22, as in a run up, if that makes sense, off some shorter term higher lows off the daily potentially. That way I could at least I could get to break even pretty quickly, or a bit of a buffer if it breaks and flushes 22 and back down again. Okay, so you always got to think, what's happening. You can even do it off a 30-minute chart, because you're always trying to trade. You're not trying to trade, if that's the level, you're not trying to trade into pullbacks like that. You're trying to trade when it's going up. You want to be trading like that after a decent pullback. So that's a decent pullback. You want to be looking here to see what happens. And okay, you've got your entry there. That's your first, big pullback there. This is your first pullback, say on that time frame anyway. And that's where you want to be trading, in that zone, because if you do start to rally off there, you've got a higher low on the weekly, and on the daily you might be trading it on that kind of thing. You're trading that breakout, so you really got small risk, but the bigger picture is on your side along with the smaller picture. You're not trying to buy in there with your stock below a level, okay? Because especially in here, you're not trying to pick a bottom. When I say picking bottoms get stinky fingers, so you've got to be careful. All right. That's pretty much it. I think anyone else quickly wanted to have a look at a stock, or you're all good, and we'll finish up there if not. I want to see what that Hang Seng's doing, because it's probably going to annoy me if I see that back up. No, I'll look at a delayed price. I'll have to open up the platform again. So it's a 30-minute chart. We get to the 5. That's a good rally. So that was an absolutely prime long, which no one's fault, just couldn't hold that. So it was very aggressive, but it was just in here. Was it in here? No, it was in here. That's right. That long was buying here with a risk just below. So it's turned out that would never look back. Should have held it. There's no way, to be honest, I could not hold that and talk at the same time. Like I said, I'm a bloke. I can't concentrate on two things. All right. We'll finish up there, guys. Anything else? If there's something I missed or something you want clarification on, feel free to send us an email to support@tradesetup.com.au. Hopefully we'll be back on next week. But again, just look out for the alert Monday morning, and we'll go from there. So for now, nothing much has changed. The market's still fairly bullish. ASX is doing all right. Nothing's changed. We're seeing these sort of big flushes lower. Everyone goes, oh, that's the end of it. We're going short, and then it turns around and rally straight back up again. So I think if it's going to be a big correction, it's going to be without a pullback to start with. It's going to be like we got hit. Let's just get back in on the ASX on the daily. Just want to show you what we'd be looking for. Now, let's just get rid of that. What was that sell? Oh, here. So it was grinding higher and it just went bang. And that's kind of your first pullback after we'd already got sold off quite a bit. So that's probably what you're going to expect, not these couple of red days like this, take out the low and everyone's going, that's it, it's over, bang, up we go again. It's not getting down convincingly, okay? So we'll just wait and trade what we see. All right, guys, thanks very much, and we'll speak to you again soon. Cheers, bye.